Hello everybody, welcome to the mini futures workshop. This is a carve out of the futures trading system workshop I teach, and what I'm showing you here is basically some very interesting slides from the first day of the 5-day workshop. Now if you have already joined this year's trader cohort, well then that might be a great introduction into the workshop, or if you're interested in futures trading and trading visual chart patterns, well then I'm sure you're finding some valuable things here in this in this presentation that should be not longer than an hour. All right, so let's first have a look at how is our trading organized. How do we trade? I mean, we are rule-based discretionary traders, and we're basically combining both, right? The rule-based world and the discretionary intuitive world, and have a trading style that is focused on visual pattern recognition. So we're following clear rules and follow the visual patterns. So we are trend followers. We are very flexible with the symbol list, meaning we've got a long symbol list, and we are very broad. We have a very broad range of time frames to trade. We basically see it here. This is a symbol list. Well, you can add more than that, and this is the time frames, the typical time frames we trade. Well, that would be day trading focus, and the upper time frames, daily, weekly, monthly, quarterly. Well, that's rather investments, because you can trade these future systems. When you get a signal to go long, for example, you can trade these signals with investing in an ETF, for example. So we're looking out for very low risk ideas as part of this trading range. These are very specific patterns, and we are focused on 3 patterns: system 1, the gecko; system 2, the turtle pattern; and system 3, well, it's the Snyder setup. So this is our opportunity matrix, our trade universe. And what is typical for our trading is that we have very clean charts. We are not indicator traders. We don't have our charts overloaded with indicators. We're basically using moving averages and that kind of thing, and then focus on chart reading, the dynamics of the buyers and the sellers. So we have clear directional bias coming from 2 time frames above the pattern, so we cannot go long and short at any time. This is what I would describe the kung fu trading style. I'm sure that is a very fun trading style, right? But you can easily lose yourself in that style of trading that is very intuitive, right? So what we need, actually, we first need a trend in the higher time frame, and then when we have the trend rules fulfilled, well, then we drop either 1 time frame lower for system 3 or 2 time frames lower in order to find a pattern, an S1 or an S2 pattern, while higher time frame rules are fulfilled to align with the pattern. So when you multiply like 25 symbols with 12 time frames in 3 systems, well, you come up with approximately 700 trade opportunities at any time. Well, possible. We are looking for very specific setups, so this gets condensed quite a bit, obviously. So it could be that at some point of the day we're actually having in the YM futures contract, we've got an S1, a gecko pattern on the 15-second chart. Then as well in copper HG contract, we might have an S2, a turtle pattern on the 1 minute. And maybe on gasoline, the RB contract, we might trade an S3 pattern on the 60-minute chart, either long or short. So this is basically, this spans the trading matrix. This is our fishing ground, and we're looking for 3 very specific fish: system 1, 2, and 3. Now, what is the trading style? There are very different and many strategies, like profitable strategies. You can trade the markets, right? But you have to find your niche. You cannot trade everything in every style, and it basically needs to fit you as well. Fitting means, well, you like the system, you feel at home with it. Basically, there's no resistance. So what we trade, we are trading breakout failures. So that's trading against the crowd. There's a breakout, and then once it fails, well, we trade that, the counterpart. System 2, basically, it's a harmonic pattern, and we are riding trends at system 3. And with all those 3 systems, we combine that very strongly with price visual price action reading. So these are the systems I'm teaching, I know about. We're not trading pullbacks, we're not trading bands, we're not trading cycles, seasonals, commitment of trader reports, etc. So my approach that I've developed during the Super Trader program of YOUR Tharp is, well, my approach is very practical and down to earth, right? I'm not a very theoretic person. I really rely like solely on charts and price reading. And I've specialized on reading the psychological footprints, the patterns leave on the chart. So a footprint gets generated by the buyer and the seller, by the dynamics between both, and the traps that get set up in the market. Because some of those patterns, multivar patterns, they are a double trap, and we love to trade those because price action coming out of those double traps can be very strong. We're looking for a slingshot move, taking out other people's stops. So my convincer, when I design a system, I actually want to collect as many edges there are within a system. Well, not too many in order not to reduce the opportunity too much, but a good number of edges that makes up a great system. Now, a system is actually not, it's not something you can design purely from logic, right? The markets are counterintuitive, so you have to apply some counterintuitive thoughts and ideas into a system, well, these systems are basically based on this idea. So what is my process to trade? Well, scanning for patterns, spotting a pattern, good quality pattern, feeling good about it because it's of good quality, and then execute it. Well, we don't have like hundreds of trades per week. It's more like between, well, depending on the time frames you trade, but it's more like 4 to 10 trades per week. And I don't mind doing some manual trading, meaning moving the stop, etc., or getting into the markets. So this is it. This is our style. Now, I really like to show in the beginning this matrix, well, everybody basically, when you start to do something new, where you think, well, it cannot be that difficult, right? So you're basically in this bottom left, unconscious, incompetent. You don't know that you don't know. It's like starting to drive a car. Well, if your mother drives the car, well, then surely it should be easy, right? But if you hit the wall, well, you understand it's not that easy, but you have to learn it, right? And here comes in, well, it moves basically here. You become conscious that you don't know, that you have to go to driving school. Well, at driving school, when you pass the exam, you're basically here. You've acquired conscious competence. Well, with conscious competence, you cannot win a car race, right? So what is really important well, that's the absolute must. But what's then really important, and maybe, well, even more important, because this route is more difficult than this one, right, is to acquire unconscious competence. So you can flawlessly execute the markets, right? So this is the important part. And with my teaching, well, the workshop is focused on this. And we've got two live trading days. So these are the first baby steps towards the top left quadrant. And then what I offer after the workshop, group mentoring programs. These are designed to get you into the upper left quadrant quickly, as quickly as possible, within less than a year. That's my mission. Sometimes it's actually as quick as 3-4 months after the workshop. Sometimes it takes more than a year. Obviously, this is a very individual thing. So why does it take months or even years? Well, because neural pathways, they have to be built, right? If you're trading the markets coming from a sense of logic, well, you will fail terribly, because trading the markets it's counterintuitive, right? And this means that if you're trading a counterintuitive system, well, your neural pathways, they have to get reset, right? You have to unlearn behaviors. If you're already an experienced trader, or if you are a newbie, well, you have to set those neural pathways. You have to use them, because it's counter human biology, right? Trading the markets with success. A novice trader always wants to counter trend trade, right? And we're basically trading against counter trend traders. Right, so neural pathways is important. Then a trader needs to go through certain learning stages. That is what I found out in teaching and coaching hundreds, thousands of traders. Well, I'm basically, that's my job behind the curtain, right? behind the ropes to guide you you guys through those learning stages. So what we are applying is simulated trading. You can be so much faster making the learnings. You build experience, right, with the patterns when you simulate, when you use a trading simulator. It's like a skydiver using a wind tunnel for 2 hours, right? It would be impossible, like flying up with the airplane and having a drop of 10 seconds. So we're using that technology heavily, especially in the beginning. And my approach is actually not offering e-courses. I'm teaching the Futures workshop once a year only in person, and the Forex workshop once a year only, because I found out that there's a tremendous benefit for a group of traders to come together at a similar level of understanding of these systems. So that forms a very committed group of traders, and this is one of the success factors actually. So chart reading is very important. You need to build that skill. It's actually a basic trader skill to read the charts, the dynamics of the buyers and sellers. And when you trade the patterns for a certain amount of time, let's say 3 or 4 months, you will develop intuition, like good intuition, intuitive input that helps you make good decisions in the market. So this is the part that helps with the discretionary part with these rule-based systems. Now I found this quote in a book, Zen and Japanese Culture. It's an old book, right, from 1959, and this quote, well, that's quite amazing. Well, read it out. You read it. I'm not reading it out just to speed up a little bit, but it's basically describing this route, right, that the swordsman needs to get into the upper left quadrant as if automatically with no conscious effort. Well, that's what we then call in trading flawless execution. Right, so let's have a look at the edges of the futures market. Futures, well, every market you trade, be it crypto, forex, futures, stocks, whatever, has its relative pros and cons, right? Well, what is good about the futures market? Well, the futures market is virtually a 24-hour market. It trades, right? 24 hours a day, nearly. Well, there's a short break at 5 p.m. Eastern time, but not many people are trading around that time in the world. Now, it's a 24-hour market, meaning that you can trade at any time of the 24-hour cycle outside of the pause, right? Wherever you are, at whatever time zone. And this is the interesting part. It's a global market. Well, we call those futures, we trade global futures as well, because it's traded across the globe. It's very liquid, right? And very liquid means the spreads are very tight, meaning you can trade very low time frames. Your transaction costs are low. Now the CME in Chicago, they have built a global platform, futures platform, and they have actually reached out of Chicago into different areas in the world. They have their hubs, right, trading hubs in more than 150 countries. So when you have a broker in India or wherever in Asia or in Europe, well, you're as quick with your execution as somebody who is sitting in Chicago. Well, we're not talking about high frequency here. We're talking about rule-based discretionary trading. So that's a big edge. So the market is very liquid. It is very regulated, and it's very efficient at any time of the day. We've already talked about this. Well, we've got little or no slippage. If you trade stocks, you know about slippage. The market is so deep that that's not a problem, even if you trade with big size. The counterparty risk is completely taken off, right? The clearinghouse assumes the counterparty risk. So whenever you buy and sell, like somebody buys somebody sells a contract and another person buys it, it goes always through the clearinghouse. There's never a buyer-seller direct relationship, right? The clearinghouse is the middleman, and this is the insurance and the protection. Because it's a 24-hour market and it's liquid around the clock, well, we have steadily flowing charts. allowing for higher time frame analysis. We don't have these typical gaps, right? Morning gaps. Well, we have a weekend gap because the markets are closed from Friday evening and they reopen on Sunday at in the afternoon. So we've got this weekend gap, but apart from that, from day over day, there's no gap, just clean flowing charts. With futures, the nice thing is you can go long and short anytime. There's no structural bias. Nobody prohibits you to go short. The futures contracts, let's say metals or energies, there's no direct dependence on an overall index, right? When you trade stocks, like 25% comes from the index this stock is part of, and 25% comes from the sector the stock is in. So only 50%, like if you've got a pattern on the stocks, on a certain stock, well, only 50% is actually depending on this pattern. This is why it makes it a bit more difficult and challenging trading patterns on like with stocks, for example. Futures is traded on margin, but the use of margin is very efficient. When you've got you've got a margin account, right? It's not like having a stocks margining account where you pay interest on your margin. Margin with futures is actually for free. You don't pay any interest, and the typical leverage is basically 1 to 20, because your margin is around 4% of the value you trade. Now with futures, there's a large variety of tradable asset classes, right? It goes from equities, stock indices, to metals, like a row of different metals, row of different energies, even interest rate futures, and some specials like the volatility future and the DX, the US dollar future, and crypto futures, right? We've got Bitcoin and Ethereum, etc. Now, what is another advantage is in the US for US residents, that you have got low capital gains tax when you trade futures, the 60-40 rule. So just a quick overview. I'm not going into detail here. These are the symbols, the future symbols we trade here. The asset classes up here, equity indices. And you can add your local contract, right? For example, the German FDAX, you can trade as well the UK FTSE, etc. Interest rate futures, we've got the notes, different maturity, and the famous T-bill. You can add as well like local contracts like the German Bund or others. Energies, crude oil, heating oil, gasoline, natural gas. For some of those contracts, well, we've got micro contracts available as well, so you can trade a smaller position size. Metals, famous, right? One of the big contracts is gold, smaller one is silver, platinum, palladium, copper. We don't trade agriculturists because they do not trade 24 hours, right, a day. We really want those liquid futures. Well, Bitcoin is part of that. Bitcoin, Ethereum, the US dollar index, and the volatility index. So these are the futures we basically trade on different patterns, looking for patterns on different time frames. With futures, you really want to know, and I'm teaching that in the workshop because it is important, the specifics, right? The contract specifications, you find those on the CME website if you Google for it. This is just an example of the MES. This is the S&P Micro E-mini future. And if you Google the contract specifications, well, this comes up. It's a bit confusing, and I've made a big spreadsheet for those that come to my workshop. It shows all the contracts with all the specifics, just quickly to understand what is going on here. So the Micro E-mini is a great contract to trade. That is five times the S&P index. These are the opening hours. And the tick size, so the smallest incremental move is 0.25 basis point. Whenever a tick goes up or down, well, that has a value for every futures contract of $1.25. Every point change, well, that's $5. And well, futures contracts, they have expiries like quarterly, for example, quarterly expiries, cash settles, etc., etc. Not wanting to go too much into detail, but there is there's a nomenclature here. There's some rules how these futures are named and yeah, coded, so you see the expiry. Well, let's move on. This is the definition pad, where it's important, right, to learn these. It goes a bit beyond the scope of this mini course. Just want to quickly talk about the important things here. So let's say this is the micro E-mini ES 1225 contract. Well, every contract, because these are standardized contracts, which makes it possible to trade on a global scale. There's a specific quantity to the contract. There's a specific quality. Well, not so much for the index, but if you think of gold, well, the gold contract, for example, let's take the example of gold. Well, a gold futures contract, it's 100 troy ounces quantity, quality 995 fineness of gold, right? And the delivery, this is when basically the futures expires, and if you're in a trade, well, you wanna roll over. Now tick, we already talked a little bit about that. Tick is the smallest possible incremental change. Tick, let's talk a lot about this. Well, you have got ticks as well in stocks, right? Which is typically a cent, but there's not much talk about it. Now, every symbol has different tick sizes, right? So the ES has 0.25, the YM has 1 point ticks, gold has 10 cent ticks, crude oil has 1 cent ticks. So you really need to know, when you trade a variety of different symbols, well, you need to know clearly, right, what is the tick, smallest incremental move, and what is the value of that. So it's basically explained here in this definition pad. Transaction costs, well, it's kind of interesting, just a bit more detail, right? When you trade a futures contract, well, it's actually an addition of several costs. One thing is the exchange fee, another thing is the NFA fee. It's basically 1 cent for buying, 1 cent for selling. It's a National Futures Organization, it goes to that. And then the broker gets some commission, that depends on which broker you use. And then you've got a bid-ask spread, right? And well, these transaction costs, when you think of the value of a futures contract you trade, these are really low. Because of these low transaction costs, we can trade even 5-second charts, right? Patterns on a 5-second chart, on a 15-second chart, etc. This makes it possible. Right. Well, let's move on. So all three systems are based on these fundamental beliefs. And if you are interested in trading the markets, or if you think about trading these systems or whatever system you want to trade, you need to know what the beliefs are behind. Because if you've got opposing beliefs, well, you will not feel well with the system. You will not be able to trade it well, because you will sabotage subconsciously the system, because you feel resistance with it. Well, this is why I'm just laying out here what are the fundamental beliefs for all three systems I trade, or we trade in our community. Well, it is we're looking only at the chart, right? We don't do any fundamental analysis. So we were looking at the charts alone and evaluate the charts and what is printed on the charts. It's actually, that comes from belief that whatever information is already included in the charts, we don't need to go and look for. Well, it is already included. Whenever it is important, we see it in the chart. When we think some fundamental news or analysis is important situation, well, if you don't see it in the chart, well, then it's actually not important, right? So we're trading, investing with the trend. Well, that's a major edge, right? You get these same patterns when there's no trending environment. Well, this is not a winning system. So we actually need a trend, and the trend is typically 2 time frames higher of the pattern, and when we have it, well, then we have an edge. So trends tend to run further than what one might ever expect. That's basically the typical thing, right? Novices think, oh, the trend is gone too far, now it's over, and we can actually counter trade that trend. Well, that's a common belief, and it's it's a bias, right? We capitalize on. The stronger and smoother the trend, the bigger the trading edge. Well, we can see that if we get very, very strong trends, we have a clustering up of patterns, and the patterns do really fantastic with high win rates. Well, that is amazing. So the stronger and the smoother the trends, the better it works actually. Trading investing with higher time frames represents a major edge. So we are not looking, let's say, there's a pattern on a 5-minute YM chart. We're not only looking at the YM. Well, we have rules for that. That's clear, right? But we have as well rules for one time frame higher, 15-minute charts. We've got rules for 2 time frames higher, the 15-minute chart. And we're looking as well at the 60-minute chart, right? This is our 4 time frame layout. We're always looking at 4, like whenever we take a pattern, we're looking at 4 charts to evaluate and see whether the rules are fulfilled. So there's a big edge because confirmation from higher time frames allows for an increasing flow of new market entrants in trade direction. There's tailwind. For example, if we take a trade on a 5-minute long and like 3 time frames higher on the 60-minute chart, well, it's in a strong uptrend. Well, obviously we get tailwind, right, from those traders that are trading the 60-minute. So we are in the 5-minute. That gives us swing potential. We are trading these systems based on leading indicators, lagging indicators. A lagging indicator, for example, is a moving average crossover. If the 8 EMA goes above the 20 EMA, well, that could be a buy signal, right, for many systems. Well, that's a lagging indicator. We don't trade those. We only look for leading indicators. So they reveal ahead of time where support and resistance areas are located, and thus price action is likely to develop. Price consolidation, so we're talking about multi-bar consolidations within a trend, are times of pause that are required for the trend to regain strength. So multi-bar consolidations, these are refreshers. That's very positive for the trend actually to continue. This needs to happen. It's a pause, it's a refresher. So multi-bar consolidations bring price volatility down and allow for low risk ideas. Well, that's another edge, right? If you've got a price consolidation, it goes sideways for, let's say, 30-40 bars, or volatility basically contracts, and that allows us to find a tight stop, a low risk idea. Market actors leave psychological footprints in the charts that can be identified as specific visual bar patterns. Markets repeat patterns over and over again. Interesting, yeah. Well, the same rules, the same pattern applies on each of those time frames and each of those contracts. We don't make specific patterns for specific time frames or markets, right? It's one pattern. These patterns are based on psychological biases, and this is why they work on all time frames and all futures contracts. You can take off, like you can show me a 4-chart layout. You don't tell me what is the symbol. You don't tell me what the time frames are. Well, they need to be consecutive time frames, and I can tell you whether I want to take the trade or not. You don't need all the other information. Understanding the dynamic behind these patterns offers an edge. Markets are a reflection of rational human behavior, whether the 1-minute or the monthly chart. This fractal nature, so the market is fractal, and these patterns are completely 100% fractal. We don't differentiate, right? It's due to humans' psychological makeup. Until we evolve into a new species, price action will always be the same. All right, so the 3 systems are actually built around about these 6 main building blocks. So what we need is we need a trend. So in order to look for a pattern, we need an established trend. So we're trading the trend. Then we've got the phase of setting the stage. This is basically when the pattern develops, and the pattern needs to develop in a certain way. System 1 is the gecko pattern. System 2 is the turtle pattern. These 2 are multi-bar patterns. And it's important that they fulfill the rules, right, during that time. Well, once they have basically completed, they're mature and ripe, well, then we wait for a battle. This is an emotional war, a fight of the buyers and the sellers, and we don't get into the trade when we have not seen yet the battle, the emotional war, because we don't want to get in a trade and then the battle starts and we get stopped out by a big bar, because the futures market is very famous for big bars and big fake outs and stop outs. Well, we actually wait for that to happen in a certain direction, so we can then hop on in trend, in overall trend direction, and put our stop right at the low of the battleground, which is great stop protection. So we act on trend strength. We're following the second mouse principle, which we are not just getting in. We're waiting for, let's say, for a long pattern. We're looking for bullish confirmation. We act on strength, and then we play the trend accelerator. So we need at least one stop run level. The more stop run levels we have, well, the better. This is the trend accelerator, because we are running for other people's stops. When stops are taken out, well, you usually get a slingshot move, right? Like things go vertical like this, right? You get an exponential move. That's the stop run move. And once the stop run move is over, well, there's going to be a pullback, right? And well, ideally with the stop run move being over, we already want to break even trade or a nicely profitable trade already. And then well, we manage towards the target. That's our exit algorithm that is specific for each of those three systems. Or you can read on your own about these 6 different building blocks. Right, so I've laid them out down here. These are the 6 building blocks, right? So this is the time as it passes by, and these are the patterns. So I've just laid out here 5 important edges. They're true for all 3 systems, right? 1, 2, and 3 systems. So what we need for all 3 systems, we need a trend and a higher time frame. In our high frame chart, we need a trend, either a super trend or an EMA trend. This is trading the trend part, right? Then we need setting the stage. Well, we need a consolidation pattern. It's either a multi-bar pattern that forms over time on a horizontal line. The line is what we call the base, and we need a certain amount of swing touches on the base, or it's a pullback in price. That would be system 3. Now here comes towards the end of this consolidation. It's basically the point of decision, right? We're waiting for the emotional battle. We call it the hook, we call it the test bar, and that basically opens up the market trap. We bring in as many counter trend traders we can into this emotional battle. Well, this emotional battle goes against higher time frame support, the 21 moving average, 1 time frame higher, and the 5 moving average, 2 time frames higher, and it should bounce off, right, that support. Well, if you decide to enter on strength, the stop goes here. It's on the other side of the moving average support, which gives us another edge, a nice stop protection. So once we are in, we're waiting for a rebreak of the base, then we're running for the stops. Basically, we're fishing other people's stops, and we go towards the target, move towards the manage towards the target. So what we are trading basically, I mean, this is a momentum move. We need a momentum move, right? And then within a trend, and then a consolidation. So how do we define the target? Well, it's actually pretty easy. We're using a measured move of the prior momentum move. So if this is the move, well, our target is actually up here, and that allows us to calculate the reward to risk, entry, stop, reward to risk, and we know how to manage the target. Now, I've already talked about the 4 chart layout, and that's it basically, right? 5 minute, 15 minute, 60 minute, 240 minute. So this is our low frame. This is where the pattern comes in. That's a short, right? This is a momentum move. This is the pattern. This is the moment of entry. Actually, this is where the stop goes, and we want certain rule to be fulfilled in the mid frame and the high frame. Now, this is our multiple time frame analysis. This actually gives us a lot of information, right? don't want to get too much into detail, but what we see here, this goes sideways and down. This is actually what we see here, right? Sideways and down. So what we get one time frame higher, well, we get more information in a more aggregated level, actually. 5-minute, 15-minute bars, but we get more information. Well, same thing here. This move down is what we see here, right? Well, we get more information, right? So we can actually see stop run levels on higher time frames, special levels. We can see the trend on higher time frames, etc. So yeah, this is it. It's just a general description of the three systems. The gecko, it's a breakout failure pattern. Yeah, we're trading basically novice traders or other people's ego. We're looking for a slingshot move coming out of this pattern. My estimate, best estimate for rules and discretion, well, this is the most rule-based system one. Let's say 80% rules, 20% discretion, because you have to evaluate, is the trend good? Are the swing touches on the line, are they good or not so good? This is where the discretion comes in, because it's more rule-based. Well, it has good opportunity, but you don't get hundreds of patterns, obviously, for the day. Now the turtle pattern, it's a harmonic pattern. It's a breakout. It's as well a breakout failure in a lower scale, but more important is that this is a very harmonic pattern, and we trade the path of least resistance. It's basically the snowflake trade or the open space trade. We trade the market when it is in complete equilibrium, and when we are trading with the trend, well, it basically pushes us with the trend. And the turtle patterns, they can go the longest way. They can go longer than typically. They can produce bigger multiples than a gecko trade, because it's so much it's so much snowflake. If a little wind comes up that supports the snowflake, well, it goes up and will come down much later. So we basically assume that the trend to continue much further. Now the third system is the sniper setup. Why sniper? Well, because many things really have to align up, and we really have to look for high quality. This is the most sensitive to quality of a pattern, but it can be the most profitable, because you can build pyramids, consecutive entries, right? Trade entries. If you've got a special type of trend, the super trend, the sniper can work wonders. So it's basically trading by going with the flow, and we're trading the dips. So we're waiting for failure signals again here. It's breakout. It's a breakout failure, basically, for failure signals based on a low risk idea. Now let's have a quick look at system one. So this is how, because these are visual patterns, right? This is how a system one looks like. So this is our base. It's a horizontal line. We've got minimum 3 swing touches. 1, 2, 3. That's it, right? And then most important is actually we need a test bar, the breakout, a big price action event that fails, a rebreak of the base, or that would be then the entry signal. So again, here we've got our six phases of a trade, and these are the main components. I mean, it gets more detailed, but as an overview, right, we need a strong trend, we need a multi-bar consolidation. For the gecko, it's minimum 20 bars. Then we need the base horizontal with minimum 3 touches, and then we need the battle, right, the emotional war, and higher time frame support. Then we need a re-break of the base, and then we're looking for at least 1 stop run level. In this trade example, we've got 2 stop run levels. That's even better, and we've got our target, and our reward to risk ratio needs to be minimum 2 to 1 in order to take a trade or not. Well, that's an example with actual bars, right? This is the pattern. This is the momentum move. So we've got 1 swing touch, 2, 3, 4 swing touches. We've got 2 bar body touches, right? But that still counts as 1 swing touch. It's like a rubber ball bouncing off the ground, right? 4 swing touches. This is our test bar, and the test bar is an excitable price action event. It's something that really should pick your attention, but not only yours, as well of everybody else in the market. And that's basically a sign that counter trend traders have entered the market. And where do they put the stop? Counter trend traders, people that go short here, well, it's clustered, right? Depending on the trader. The very aggressive ones, well, they might put it here right above the big bar. Others might put it right on the other side of the base, or at this lower high, or at the consolidation high. So we've got a chart that is clustered with stops, right, of short traders. Now, if they get squeezed, right, if the stop gets triggered, this can create, well, that's what we're looking for. A slingshot move, a stop run move. So we're taking out these stops, then it gets to this one, we get a nice push higher. Well, a good number of stops will actually be clustered here, or we get a nice push higher, then we might get a pullback, and then it goes for the final stop run move, right? Consolidation high, and boom, it goes up, right? In trend direction. So the test bar is important, it needs to fail, and then it needs to re-break. Two entry conditions. Test bar needs to fail, and we need a re-break. Okay, well, that's the concept of the test bar. I've talked about that in another video, so I'm not repeating that here. But this is how a test bar looks like. It's an excitable price action event. It could look like this, a big bar. It could have a big wick, even better. It could be an elephant bar, like a big bar without any wick, or we can have multiple test bars in a row. These are all good. Well, one student said, I'm not very comfortable with the test bar. It scares me, which is why more reason to trust it, right? So these trading the markets successfully, it's a counterintuitive thing. A normal human being, he sees a big bar like that, well, gets scared. What happens if a trader gets scared? Well, you don't do anything, right? You stare. Maybe you stare at the markets, or you say, okay, it gets too stressful, something strange happening here, let's leave it. You might not watch it anymore, or you might stare at it, but you will certainly not act, right? And if you act, well, then being stressed or overwhelmed, well, our system is built on that. So we are waiting for that. We are not stressed. We actually see that, and we are very happy and feel very passionate about it if it's a high quality, very excitable price action event. I have learned that doing what makes me feel comfortable doesn't lead to success. Well, that's nicely said, yeah. So each of those systems, that's system one, comes with different subtypes and in different forms. And one thing is knowing about the theory, and another thing is, okay, what types are coming up in the market? What can I trade, right? Because in the beginning, if there are 10 S1 patterns, you might actually miss more than half of those, because your subconscious brain, pattern recognition is a subconscious activity. Your right brain needs to learn it, right? You have to teach it, expose it to patterns. And the other thing, you might not be even aware that this or that is a valid pattern. Now, this is a standard example. This is as well an example, right? We might get a big move, a volatility pickup before the breakdown. These are all long patterns, and then a rebreak. This is a very nice pattern, or it looks like this. Here we've got the three touches at the end of the pattern. We can have them in the beginning of the pattern with a lot of white space here. Never mind, right? Or we can have three touches in the beginning. We can have a huge war. So it comes with different examples. Now, theory is one, right? Practice is another thing. Now, this is a live market trade from one of the students. And again, we're looking here at the 4-chart layout. Let's see, what is that? That's a 15-minute chart, 15, 60 to 40 daily. 4-chart layout, our low frame. This is where the pattern comes in. That's an S1 pattern. That's our momentum move. This is our consolidation. This is our test bar, right? Test bar, nice, beautiful. We love that. And entry is here, stop is here. What is nice about this stop level? Well, the stop level is right here on the other side of the 21 moving average. And the 21 moving average is our main EMA for support, and we are trending. Our high frame is trending, and even our high frame is trending. It's actually in a momentum driven chart, right? And that's a bonus. It's in a super trend, and it's a momentum driven chart, and we trade momentum till it ends. So this is the entry, and this is what happened. So we saw a continuation of the momentum. This is a trade that has no swing potential, because momentum might end at any time, but you want to trade momentum till it ends. And you can see here how it reached a really nice level, right? If this is your 1 hour, I don't remember how many hours was that, but that looks like 3.5 hour trade. That's quite nice. One good trade per week and you hit your weekly target. Okay, just quickly as an overview, 4-chart layout, right? If the pattern comes in on the lowest time frame, top left, be it system 1 or system 2, well, then we need 2 time frames higher, we need a trend, and in the middle frame, that's what we call the mid frame, we need a touch of the 21 moving average, right? Plus another touch higher. So these are the basic rules that gives us good edges, and this is how we trade all three systems. Now, when teaching traders, be it experienced traders or novices, let's take the example of an experienced trader. Well, if you learn a new system, you will actually be an apprentice again for that new system as anybody else, right? As a novice trader as well, and you start, right? Well, not novice, basically an apprentice. If you don't know about anything about system or anything, well, you will be a novice trader, right? And you're basically fighting against brink of ruin. There will be a lot of emotions of fear, anger, anxiety, depression, even, etc. Well, you want to get over that, right? And well, people coming out of the workshop, well, they will be on this, right, on this level of their trader development process. And they're trying to get consistent traders, right? And this is the next stage. As a consistent, well, there's still frustration and resistance around, right? This is why it is a trader development process. Traders go through boom and bust cycles, like numerous boom and bust cycles. That is very normal. That is part of trader development, and it's not to be underestimated that a trader needs to develop, right? It's not like you get some rules and then you trade them, and it takes a little bit of time, right? But time is, well, our time is 1 year, right? Sometimes less, sometimes more. That's what we're looking for. So if you're a consistent trader, well, you start to make money, positive hours, consistently. You hit your weekly target, you hit your monthly target, and there's much more self-reliance. You don't need to ask other people's opinion, because you have so much experience with the systems that you ask yourself, right? I mean, you trade from a gut feeling when you've gone through all this training. And this is then when we say, well, a trader starts to flawlessly execute the markets, right? The next stage is then the expert stage. Well, this is where you work on increasing your position size. You start with a small position size, and then you increase it, and this is where the big money basically comes in, right? Being a consistent trader while increasing your position size over time. Then we've got a good number of traders in our community that have achieved the mastery level. Well, that's trading in a state of now. That's basically a meditative state where you feel what is going to happen next in the market. Van Tharp talked about that quite a bit, and well, I can experience it firsthand with traders in our community. Sometimes I'm on that level, but you don't have to be a great trader, right? Sometimes you might be there, then you drop to the expert level. Well, no problem, right? Some of you might actually get here astonishingly quickly. So how do we get that done quickly, the trader development path? Well, it's through the application of deep practice or deliberate practice. It's something I've come up with a few years back, because I've been trained as a tennis pro, well, in my adolescence, right? And back then in the 80s, it was very normal to break things down in chunks, right? And learn the chunks and then integrate different chunks, one after the other. Well, that is deep practice. It was just not named back then like this, right? Now we've got a label, and it is not applied in trading, right? Not as far as I know. So I've come up with that, and I've built all my group mentorings around this this concept of deep practice. So what is deep practice? It's a mindful, highly structured form of learning by doing, while growing from making mistakes, right? You learn most from your mistakes than you do from your big are fantastic winners. What is the process of deep practice? Absorb the whole. First, see how is the whole thing working. That's what we're doing in the 2 live trading days of the futures workshop. Then we chunk up. I will chunk it up for you, right? The little the little things you need to do. Chunk it up. The little chunks, go through them slowly and a bit more quickly. You will make your mistake. Many mistakes, you repeat it till you master it, then you learn the new chunk. When you have 2 chunks learned, mastered, well, then you have to integrate those, and then the third comes, you have to integrate it with the prior 2, etc. So this is how you grow quickly, right? By going slow. You actually go slow, right? You slow down in order to get quickly to the end result. You will love it, so it actually gives you joy to learn and grow till you make it fluent in the end. So there's some science behind skill. You need to myelinate, right? Repeat it so your neural circuits grow strong. It's about myelin and the adaptation process. You can read about it. I'm not going into detail here. So what are the components of success? Well, it's the deep practice process. It's ignition. This is why I'm inviting role models, like successful students, come and talk to the group and to the trader chat interviews on my YouTube channel. This is ignition. Well, I ignite as well the group, obviously, with ahas and learnings. And what is required is a coach that tells you where do you do the mistakes, right? And what you can do better and how. And these three things combined, that's actually from the book, The Talent Code from David Coyle. I'm putting you in the YouTube video in the description a link of a short video from David Coyle. Very good book, Talent Code. So these things combined, these three things combined give you exponential skill growth. Like when you're in the flow zone of your trader development, you will grow rapidly, exponentially, right? And we see that, right? I try everybody to get into the flow state of growing as a trader. Now, you actually need a paradigm shift, right, when learning to trade. Because every human being, when he starts to look at the market, well, you don't teach him anything. He will do these mistakes, right? That's just part of human nature. This is why I call them the top trader challenges. For example, starting to trade without a system, or jumping the gun at whatever moves, or jumping into trading the live markets right away. These are the top trader challenges. You might to experience them for yourself, but basically you want to overcome them, right? In order to focus what is really important: deep practice, simulation technology, and climbing up your trader development path. And in the end, what you want when you trade the markets in the upper left quadrant, when you flawlessly execute them, well, then you are in a mental state of being cool, calm, and confident, the 3 C's. And that's basically the paradigm shift, right? Overcoming these challenges and actually applying these things to learn to trade the markets in successfully and consistently in less than a year. Okay, well, over the last years, 13 years, 14 years now, coaching with the YOUR Tharp Institute, I have actually distilled, like working closely with traders, these 12 key success factors for rapid trader growth. Unfortunately, the big majority of traders, well, they do not follow those. They don't even know what they are, right? And well, it's not about sitting in front of the screen for many hours, right? This is not the 12 key success factors. It's not about having the goal to maximize your weekly or monthly R result. It's not about trading the markets right away and trade whatever moves. It's not about getting euphoric and emotional when trading the markets, right? Good trading is boring. Well, what are the key success factors? I'm actually linking you a video as well in the description on the key success factors. Let's just quickly jump over like 2 or 3. System is clear, right? But you need a clear trading goal. It should not be a stretch. Well, you need a goal, should not be a stretch goal. You want to have a low-hanging fruit goal, right? But then reach it as often as possible. And this is then what we call consistency. And when you can achieve an achievable goal that you can achieve when the market is not doing that well, right? When the patterns are not responding that well to the market, but you still can achieve your goal in a difficult market environment. Well, this is then the consistency. And when you're consistent, well, this is then when you increase your position size. It's about looking at your beliefs as well. Well, that was the core competency of Van Tharp, right? Beliefs, useful beliefs, non-useful beliefs, and how to release, how to change those limiting beliefs, making them useful, basically. Mental state is so important. Your path, using the tools, the group, trading game. Well, we come to that later in the trader development path. And your trader strategy. So what do you do when you're 2 hours per week? When you have met it on Tuesday, let's say, what do? You call it a week? Do you have outer levels? We've got the 5-hour level for the week, the 10-hour, or do you go for the moon at some point? Let's say beyond 50 hours per week. Do you go for 100, 150? Do you go for the moon? Well, you need to define that. We have traders that make more than 100 hours per week, right? Not only once, but repeatedly. So this is what you outline in your trader strategy. And this, the clear trading goal and the trader strategy, well, that goes hand in hand. Yeah. It actually helps a lot if you have a regular meditation practice before coming to my workshop. If it's only 5 minutes, 5 times a week, well, that makes a big difference, because it gives you awareness of your mental state and it brings down mind chatter. So that's a great thing. And I have got the Van Tharp happiness assessment test. You can take that for free and you can find out what your happiness goal is. Because a happy person, like if trading makes you happy, if it's your passion, well, that is one of your key success factors. It is one of the key success factors as well. So I'm here to establish the world's #1 trader hotbed and to develop successful, consistent traders in less than a year. That is my passion. That's my vision for the community and my vision when teaching traders. So everybody has heard of Jesse Livermore. Look, I mean, he died in 1940, right? That's a long time ago. But what he wrote in his book, it was actually an interview, reminiscence of a stock operator, is still gold today, right? Gold nuggets. The desire for constant action, right? Shooting whatever moves. Though they have brains, they cannot sit tight. Don't be an impatient trader. React only when the market gives the signal to speculate. So have a clear system, right? I recommend you to read the book. It's really good. There are a lot of gold nuggets in there. So it basically teaches that patience and high quality, waiting for the right market situation, is actually key. Right, so that's the last slide. The question is, when do you join the Futures Trader cohort, right? Every year we've got a Forex cohort, we've got a Futures cohort, and with every Futures Trading Systems workshop, it's a 5-day workshop. 3 days it's about the systems and theory, and 2 days are live trading days where we apply the 3 systems. And then I'm offering as a 6th day at a very low cost, a crypto day, where you learn how you apply system 1 and system 2 in the crypto markets. And it's doing really, really well when the crypto markets are in an exponential up leg. Very strong and smooth trend, right? Exponential trend. The charts are clustered with patterns on a daily, on a 4-hour chart, on a daily, on a weekly, even a monthly chart. I don't even need to trade these lower time frames. I trade 240-minute and higher. Then it becomes an end-of-day trading system. So yeah, this is what comes up. I hope that was interesting to you. And I'm happy to have spent this time to teach about the workshop, and hope to see you soon in one of the trader cohorts. Better sooner than later.